Morning Joe. Economic analyst Steve Ratner has made his way over to the Southwest Wall to break down the various economic indicators that we are seeing, including, Steve, how Americans are feeling about all this.
Yeah, Mika, and the answer is Americans are not feeling good at all. So let's take a look at a couple of the numbers that we do have. So consumer sentiment obviously measures what consumers feel about the economy at a point in time. This gray line going to black here is all Americans put together, and you can see how it's rolled over like that. This is the fourth lowest reading in history since they started taking this survey. It's an interesting thing that I've shown you before, but people switch around based on who's president. Before the election, the Democrats were more optimistic, now less, and vice versa. But even this Republican number, which has gone up a little bit, in Trump's first term, confidence among Republicans was up here. So even Republicans are still a long way from feeling as good about Donald Trump 2.0 as they did about 1.0. No ambiguity about CEOs. CEOs feel like this has just gone off a cliff. This is the lowest reading since 2010 in the wake of the financial crisis. CEOs, and I've been around a lot of CEOs in the last few days, and we talked about it a few minutes ago, they hate the tariffs, but they hate the uncertainty even more. They have no idea how to plan their business. They have no idea what's coming. You're seeing CEOs at the moment releasing their first quarter earnings reports where they normally tell you the outlook for the year, and company after company is saying, we can't tell you the outlook for the year because we don't know.
Steve, I asked this sincerely. Are the CEOs you talk to, are they genuinely surprised by what's happening here? I mean, this is exactly what Donald Trump advertised during the campaign. It's exactly what places like Goldman Sachs predicted, that the economy would be much stronger if Joe Biden were reelected, or excuse me, if Kamala Harris were elected. Are they actually surprised by what they're watching here?
Yeah, Willie, they are, and I think they thought that a campaign is a campaign. People make lots of promises, and then they come in office and do something more moderate, something more like the right thing, and so they're stunned. They are really, literally in a state of shock. They never expected this.
So let's look at your second chart, Steve, which gives us some of the reasons for the pessimism you just laid out, and that's inflation, that's cost of living, that it's just going to get a lot more difficult here this year to get through the day.
Yeah, so prices haven't actually started to go up much yet, but it is coming because as these goods come in and the import taxes are put on them, prices are going to go up. Consumers are terrified. The market itself actually is not quite as pessimistic about inflation, but consumers really are scared. 6.5%, up from under 3% just a couple months ago, the highest since 1981. And so you see that then reflected in something you guys have been talking about, but we'll lay it out here, which are the polls. 39% approval rating for Trump, lowest going all the way back to somewhere before Nixon, maybe LBJ at the height of the Vietnam War, who knows, but for a very, very long time, lower than where Trump was last time at this point, at first 100 days, and actually lower than where Joe Biden was after his first 100 days.
You know, Steve, I just want to go back. You said these CEOs, these captains of industry, these wizards of Wall Street are stunned. They are stunned that Donald Trump is doing what he said he was going to do since 1987, that he's doing what we said he was going to do. We kept warning about, if you like certainty, this is not the way to go. He's going to really, really lean into the tariffs. He said tariffs is the most beautiful word in the English language. How could they have deluded themselves that he was going to come in and be Eisenhower? He never was going to be Eisenhower. He promised them every day on the campaign trail that this is exactly what he was going to do. So how can they sit back going, oh my God, I can't believe he's doing what he said he was going to do since 1987?
Joe, it's a great question. I think there's a combination of reasons, and I'm not here to defend or explain it even, but I'll try to put myself in their head for you. Trump 1.0 had some tariffs, but they were far more modest than this. They caused much less chaos. Politicians say a lot of things on the campaign trail. And honestly, just what Trump has done here with the tariffs is just so far over the top. It just never occurred to them. I shouldn't say never occurred to them. They never believed that we could have 154% tariffs on things from China, meaning effectively those toys will not be on the shelves at Christmas.
So, Steve, moving forward, President Trump said that Biden is also responsible for the future. What is the economic outlook under Trump's second presidency?
Yeah, he said Biden was responsible for what's happened in the stock market, and moreover would be responsible for anything else that happens in the stock market.
Yeah.
So let's talk about what happened in the stock market. In Trump 2.0, the stock market is down 7%. That is the worst performance of a stock market in the first 100 days of a presidential term since Nixon's second term in 1973. It is in stark contrast to Trump's first term, when, contrary to what many people expected, the stock market actually went up 5%. And back to Joe's question, because he didn't come out and do all this crazy stuff. But also what is really troublesome for every American, whether you have an IRA or you're an investor, is the volatility. Look at what the stock market did in the course of these 100 days, and compare it to any of these other periods. This is another form of uncertainty, which is unbelievably destabilizing to business. So where does that put us all together? Puts us all together with recession odds going up very, very sharply. We don't yet obviously have data yet on what's happened really in the last little bit, but let's just go back and take a look. There were some fears of recession back in 24 when the Fed was raising interest rates. When Joe Biden left office, you guys have talked over and over again, how about when Joe Biden left office, the economy is growing 2.5%, low unemployment, inflation on its way down, and so recession odds close to zero. Trump comes in, recession odds go up, 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 45 to 40%, Goldman Sachs versus Bloomberg. And then, just as a fun fact, on April 9th, Goldman Sachs raised its recession probability to 65% because of the tariffs. 2 hours later, Trump rescinded some of the tariffs or delayed them, and they took that forecast back down to 45%. And this is another example of the volatility and the uncertainty that business hates and just makes their job unbelievably difficult.
All right.
So, Steve, before we let you go, Steve, really quickly, I just want to ask you about you referenced it. This report is a little quirky, just as a caveat, a little quirky because imports flooded in. People were trying to beat the tariffs. That sort of skewed some of the GDP numbers. There's no doubt that the next 2-3 months are looking pretty rocky. But you had mentioned it. Talk about why this reading was a little bit quirky.
Yeah, Joe, it was quirky for a couple of reasons, and it's worth pointing out. First of all, Trump wasn't even president for the whole 90 days. Secondly, it ended on March 31st, and the tariffs came in on April 2nd. But as you said, the key things were that imports came into the country in anticipation of the tariffs. That lowers the GDP, but you also had a bunch of businesses out there trying to make some investments and buy some capital goods before the tariffs. That makes it higher. When you strip it all apart, it does appear that the economy grew by a couple percent in the first quarter. But that I would put on Biden. I mean, Biden was the president for a month of that, plus it was his economy that Trump inherited. So I give Biden credit for what was actually not a bad GDP number. We got to look ahead. There was a jobs number yesterday from ADP. We're going to get another jobs number this Friday. But the ADP number that came out yesterday showed roughly half as many jobs being created last month as the month before. So you may start to see some effects of Trump. But looking ahead, it's all bad. There's nothing but gloom out there in the business and the investor community.
Yeah, I mean, that's why again, that we've said it here. The next 100 days will be more telling even than the first 100 days as far as the economy goes. Again, there are a couple of caveats to add to this number. But you look at consumer confidence plummeting, you look at savings rates down, a lot of reasons to be deeply concerned for Americans as we move forward over the next 3 months. Morning Joe economic analyst Steve Rattner, thank you so much. Caddy.